With companies like NVIDIA, Microsoft, and Google leading the way with regard to AI, many investors are mainly focused on AI in 2024. But you may be surprised there are many exchange-traded funds performing great in 2024 that have very little or no investment in AI-related companies. In today's video, we're going to look at 5 of the top ETFs not focused on AI that have performed extremely well in 2024, have great dividend yields, and could be a great addition to your portfolio. We'll dig into each fund and what investments they focus on, their dividend yield and expense ratio, and how each ETF has performed year to date and over the past 5 years. I'll also let you know at the end which of these ETFs, if any, I'm currently invested in. And before we dive in, let me know in the comments an ETF you're seriously considering adding to your portfolio and why. Also, hit those like and subscribe buttons so the YouTube algorithm experts know they got it right showing you this video. To come up with a list of the top 5 ETFs so far in 2024 that aren't invested in AI, I had several requirements that the ETF needed to meet to make the list. The requirements were that each ETF have very little or no investment in AI, a dividend yield of at least 5%, an expense ratio under 1%, and at least $1 billion in assets. Based on those requirements, here are the top 5 ETFs based on their year-to-date returns. Coming in at number 5 with a year-to-date return of 8.16% is DEM, which is WisdomTree's Emerging Markets High Dividend Fund. DEM mostly invests in high dividend yield equities, and the fund tracks a dividend-weighted index of emerging market stocks ranked in the top 30% by dividend yield. With DEM being an emerging markets fund, it invests in companies outside of the U.S. Here's a quick look at the top 10 countries that DEM has investments in, which account for almost 88% of the fund's investments. DEM currently has an expense ratio of 0.63% and has the lowest dividend yield of this group at 5.46%. In regards to performance, we'll show what a $10,000 investment in each of these ETFs will be worth now and over different time periods. But as I stated earlier, I'm ordering each of these based on the returns so far in 2024. For DEM, here's a table that shows what $10,000 will be worth invested in DEM year to date, over the past year, 3 years, and 5 years. And I've also added an additional table that correlates those amounts to an average annual return per year. DEM is a solid emerging markets ETF that could make a lot of sense to add to your portfolio if you're looking to add some international investments to your current holdings. Pulling in at number 4 with a year-to-date return of 8.71% is MLPA, which is Global X's MLP ETF. You're probably wondering, what's an MLP? An MLP is known as a Master Limited Partnership, which is a publicly traded limited partnership focused on the real estate or natural resources sector. Investors can buy units, like shares, of an MLP. MLPs can offer steady income as well as a variety of tax advantages, but they're not without risk, mainly due to their concentration in one single industry. MLPA and the number 2 ETF are both MLPs that focus on the natural resources or energy sector. MLPA is a market cap weighted index of U.S. listed midstream MLPs. And now you're probably thinking, what do you mean by midstream MLPs? Midstream is a term used to describe one of the 3 major stages of oil and gas industry operation. Midstream activities include the processing, storing, transporting, and marketing of oil, natural gas, and natural gas liquids. So based on that definition, it means that MPLA is investing in those companies that handle those types of activities like processing, storing, and transporting oil and gas. Here's a quick look at the top 10 companies that the fund invests in, which account for over 88% of the fund's investment. There's some recognizable companies in the group like Sunoco and Energy Transfer. MLPA has the lowest expense ratio of the ETFs in this list at 0.45% and a very nice dividend yield of 7.46%. Here's what $10,000 would be worth now invested in MLPA year to date, over the past year, 3 years, and 5 years, and also the table that correlates those amounts to an average annual return per year. MLPA and the second ranked ETF in the list, which I'll be highlighting shortly, are both solid ETFs representing the energy sector. If you want some exposure to that area in your portfolio, either of them would be a great fit. Dropping in at number 3 with a year-to-date return of 7.96 is URA, which is Global X's Uranium ETF, which seems pretty obvious that it contains investments in, you guessed it, uranium. The fund tracks a market cap weighted index of companies involved in uranium mining and the production of nuclear components. Here's a quick look at the top 10 companies that the fund invests in, which account for around 65% of the fund's investments. URA has an expense ratio of 0.69% and a dividend yield of 5.68%. Here's what $10,000 would be worth now invested in URA year to date and over the past year, 3 years, and 5 years, as well as the table that correlates those amounts to an average annual return per year. As you can see in these graphs, URA has been a really good investment over the last 5 years and performed better than all of the ETFs in this list over the 3 and 5 year periods. Once we get through with all of our top ETFs, I'll go over how each of these ETFs performed compared to each other, as well as the S&P 500, so you can see which ones stand out year to date and over the last 5 years. In regards to URA and your portfolio, if you're interested in a more narrow focus in nuclear energy and companies involved in that arena, then URA could be a nice addition to your investment. The runner-up on this list with a year-to-date return of 11.16 is AMLP, and no, I didn't just reverse a few letters or get confused with MLPA. This is Alarian's MLP ETF. AMLP is a market cap weighted index of publicly traded energy infrastructure MLPs in the United States. AMLP and MLPA have pretty similar strategies and actually have the same holdings in their top 10, but they do differ on how they're weighted, as you can see here. You may also be asking, why are there two ETFs available that are so similar? And the answer to that is there are two financial firms in Global X and Alarian that are trying to offer customers their own version of a product like this. When looking at the details for AMLP, it has an expense ratio of 0.85%, which is pretty high, but a great dividend yield of 7.71%. Here's what $10,000 would be worth now if you invested it in AMLP for year to date, past year, 3 years, and 5 years. And of course, our other table that correlates those averages to an average annual return per year. AMLP, just like the other MLP ETF, MLPA, are solid ETFs representing the energy sector that will allow you some exposure to that in your portfolio. And finally, coming in at our number one spot in the ETF with the best return so far in 2024 that has no investments in AI and boasts an incredible dividend is BITO, which is ProShares Bitcoin Strategy ETF. And yes, it invests in one of the most controversial currencies of our day, Bitcoin. Well, it actually invests in Bitcoin futures contracts, and the profits it makes from those future contracts allows them to pay a very hefty dividend, at least for now. According to ProShares, they aim to produce returns that correspond to Bitcoin with BITO, and it was the first ETF that allowed you exposure to Bitcoin without actually purchasing Bitcoin directly. When looking into the details of BITO, it has the highest expense ratio of this group at 0.95%, but its dividend yield is currently at a jaw-dropping 28.81%. Yes, I said that correctly, 28.81%. For BITO, since the ETF has existed since October of 2021, I can only show you the results for year to date, the past year, and since inception. Based on that, here's the table showing what $10,000 would be worth now invested in BITO for year to date over the past year and since its inception in 2021. And of course, our other table that correlates those amounts to an annual return per year. For BITO, you can see the amazing returns year to date and over the last year, which directly correlates to the rapid rise of Bitcoin over the same periods. But you also see the concern when you go back almost 3 years to the inception of the ETF, and it has an annual return in the red, just under 6% per year. BITO gives you access to Bitcoin-related investments with an incredible dividend, but obviously carries with it a high level of risk due to the volatility of Bitcoin. Now that we've revealed the top 5 ETFs in our list, let's compare how each of these did over the last 5 years, and we'll also throw in an S&P 500 ETF in BOO to see if any of these ETFs outperformed the S&P 500 over those time periods. I'm going to leave BITO out of this comparison because it clearly beat the S&P 500 year to date and over the past year, but lags behind the S&P 500 since BITO's inception in 2021. None of the ETFs in this list could match the S&P 500's 15% return year to date, But over the last year, both AMLP and URA beat the S&P 500, with URA ahead by a pretty significant margin, as you can see here. When we move on to returns over the past 3 years, all but DEM outperformed the S&P 500, which is not a trivial event since the S&P 500 averaged over 10% per year over the past 3 years. And finally, when we roll back 5 years, only URA outperforms the S&P 500. But once again, it distanced itself pretty significantly, beating the S&P 500 by over 8% annually. Definitely some impressive returns for most, if not all, that we reviewed in this video. And remember, I mentioned earlier that I was invested in one or more of these ETFs. Which do you think they are? Something on the safer side like DEM, or maybe a really risky ETF like BETO, or maybe somewhere in between with the natural resource / energy related ETFs like AMLP or MPLA? Well, it's actually BETO. I'm not a huge fan of Bitcoin, but with BETO, I can get some exposure to Bitcoin without having to deal with Bitcoin directly. It's only around 2% of one of my non-retirement accounts, but it allows me to scratch that itch by having a small investment in a cryptocurrency. Well, that's it for this video. We reviewed 5 of the top ETFs, with some topping the S&P 500 over the last 5 years. And each of these ETFs have a very nice dividend to boot, which I know is something many look for in investment. Let me know in the comments your thoughts on these ETFs and if you're invested in them or are considering investing in them. I'd especially be interested in hearing your feedback concerning crypto investments. As always, thanks for watching and hanging around till the end. Don't forget to like the video and subscribe so you know when I put out new content focused on your money and how to manage it best with a little bit of comedy thrown in for good measure. See you next time.